So are you full of hope or are you just plain angry? And if you're wondering if the world is falling apart, yes, yes it is. Hey everyone, this is Chris. Welcome back to the channel. So we're taking a look at market psychology. If you've never seen this before, I think it'll be real fun for you to take a look. And it's really interesting because we'll take a look at this first. This is the chart of ARK Invest in the last 5 years. So it's gone from being negative to positive in the last 5 years. So now it's officially up 6% in the last 5 years, but you know, in 5 years is basically flat. I'm sure you guys can see that. And you can see that essentially it was a big up and a big down. And actually what's really interesting, if you look at this older chart of market psychology, it actually matches ARK Invest to a T, which is really quite funny. I'll show them again. You can see them here. As you can see, you get kind of this peak, a drop, and then drop again, right? So you can see right here. So, you know, there's a little bit of hope. So I want to go through this and also show you how pumpers work. And when you read through this, you'll kind of see how the system works and how people think about the market. It's really fun, quite funny. Okay, so we start out with disbelief, right? That no one believes that the stock market's going to rally. It's going to fail like others. Then we get into hope, which is a possible recovery. Okay, things might be going good. Looks okay. Market goes up a little bit more. Oh, wow, the rally is real. Now you're optimistic.
And it's going to go up. You know, these numbers all go up. As Tesla grows, these numbers all go up. So this is great stuff.
And then it starts to go up even more. And now it's time to get fully invested, right? You believe it. Then it's thrill, right? Thrill is like, this is exciting. I like making money, right? And
now, of course, if everything goes well with Tesla, we all become Teslanaires.
I will buy more on margins. Got to tell everyone to buy. And it's kind of funny because at that point, you know, you're right about here, right? Got to tell everyone to buy. Which is right about here, and everyone's getting excited because we're all making money, right? And then here you get euphoria. I'm a genius. We're all going to be rich, and this is always at the top of these kind of things. And
this is a once in a lifetime deal right here with AMC and GME. This is like, it never happened before. You know, this is Jordan, you know, hitting the highest points that he's ever have. You know, type of deal. When he did the crossover, this is that type of deal. It's Michael Jackson moonwalking.
Cash flow is bigger and bigger. And then you think about the international opportunity. Oh my gosh, like that's just, woo, crazy. Okay, so 40 PE, I don't even think is high if we slapped a 40 PE. So it's like you usually don't even consider that. So $6 billion market cap, I would say the share price should be somewhere between $70 and $80 a share.
When Rivian first announced their IPO, I think they were saying like, we made videos about it, they were like saying 50s and 60s, and then suddenly we jumped up to the 70s, and then the stock opens up at 95. So like, it basically just doubled in like a couple of days, the price of this thing. And I was already saying like, you know, 50, 60 seems a little bit high, and then we're open at 95, which is just, you know, ludicrous. So I didn't even really get it on the first day, because I was thinking, oh, you know, it's already overvalued, I don't want to mess with this thing. But it kept riding up for the next couple of days, which really shows the fervor in the market. Hence, I started talking about crash. Peaked out at around 178, I believe. Is currently trading at 128. And, you know, whenever Dogecoin was going up like crazy and everyone's having fun doing Doge. And the Rivian one was the big one for me when you had this car company that hadn't made any cars. It was like suddenly, you know, the second most valuable car company in the world. And I was like, what? And I started calling everyone, you know, this is probably the top. And people are like, oh, you're no fun because I'm a genius. We're all going to be rich, right? Things start to take a dip and you get complacency. So people are like, okay, we just needed to cool off a bit for the next rally, right? Because stocks only go up.
Wall Street doesn't seem to get that, but when you see $1.25 a share or $1.30 a share, or $1.50 a share, it's not so much important for where Tesla is today. It's important for looking for where's Tesla going to be in 2023 and then later.
So it's just got to cool off a little bit. It comes down even more, right? People have never seen this before now, because remember, many people got in the market here and they don't never seen things go down. That's anxiety. Why am I getting margin called? This dip is taking longer than expected, because before, right, when essentially, and even like your big YouTubers, Meet Kevin's like, buy the dip, right? Because the basic gist of it is that whenever you buy something, it's going to go up. And then you start again to denial. Denial is, my investments are with great companies. They will come back.
AMC right here. We got a lot of analysts, you know, putting out information now, letting us know institutions, the big dogs, the banks, they all loading up on AMC why it's cheap.
And it's funny because you will see a lot of people on YouTube that are frankly in denial. It's a real thing, because basically what they try to tell you is like, you know what, you got your money in something good, it's going to go up, you know, $20, $30, $40, maybe even $50, maybe $100, you know, and the estimates keep going up. So they got to go more crazy with the estimates.
Now, let's talk about it. The first banger on the list, but you know I can't forget this. This is not financial advice. I just hope a bunch of oven mitts, baby, because it's about to get hot in the kitchen.
Then where are we going to be in Q4? Q4 might be pushing $1.80 a share. Maybe Q4 in my dreams hits $2 a share. And what does that tell you about 2023? It means the annual earnings per share in 2023 is $8 or more a share. And maybe it's $10 a share. I think James Stevens is up around, he's over at $10 a share for 2023.
I just hope a bunch of oven mitts, baby, because it's about to get hot in the kitchen.
I think we're $10 a share in 2023 and possibly $12 a share. And where does that take us in 2024? And I think Tesla's going to 4x to $1,200 a share in 2023, probably by early 2024, that I thought it was going to 4x to $1,200 a share. Now with the share price falling, now it's a 5x. It's almost a 6x. We're looking at really, really positive story, looking
to the upside, but it's basically denial. The other kind of denial you have as well, which I think a lot of people are in, is in fact just saying, oh, well, those people on Wall Street they're just stupid. All those charts that they show you, charts are stupid, numbers are stupid.
I'm watching this price action for the last week and a half, 2 weeks, and I'm going, they're halting their stock. They're not letting it be traded, but I couldn't prove it.
Analysis actually makes sense. Okay, so if you could just direct your attention to the screen. Everyone paying attention, hello? Class, hello? Okay, good, great. This is very important. Make sure you're looking at the screen now so you can learn why technical analysis makes sense, okay? So
you know, we're in a good company. Just don't worry about numbers and charts. Those people on Wall Street, they're just all dummies. And that's sort of how this works. And there are different, you know, sectors or sort of areas of psychology where we could be at, right? Panic. This is quite funny. So when you should have been selling up here, euphoria, like when essentially everyone and their neighbors talking about Dogecoin and stuff like that, that's time to be getting out. But generally speaking, for a regular person, they start to panic around here. Crap, everyone is selling, need to get out. And it's, you know, towards the bottom, of course, which is obviously kind of where we are now. It's a lot of people are starting to realize, wow, things aren't going to look so good. And this is something that I've been telling you guys a lot in this channel where I just show you numbers and sort of kind of show you where I think we are. And so you've been prepared for these things, right? And you would be planning ahead of time. So unfortunately, a lot of people like we're in this situation at the moment. And it's like, well, you got to do what you got to do. But, you know, this is fun to look at the psychology of it. Then you have capitulation. It's I'm 100% getting out of the markets. I can't afford to lose more. Now, Bank of America thinks we're there now. That's what they think. And, you know, they could be right. I'm just showing you different opinions. And, you know, this is essentially theoretically the bottom, right? And it's kind of funny because it could go a little bit more as well because you got anger. And this is where you see a lot of people, this happens every time in the crash. Oh, the market's all rigged. Wall Street's, you know, trying to cheat you. Everyone's going to lose all their money because they all cheaters and you can't win at this game, etc. And this is why I always say, if you don't know what you're doing, if you have a bad attitude, if you just ignore numbers, sure, these things can happen to you, but it's not like everyone is losing all of their money. That's why I show you guys stuff all the time. But yes, if you're in companies that burn a lot of cash, and if you're in companies that are, you know, losing money and are in an industry that loses money and all of their peers lose money and, you know, the future looks bleak because of recession, or you're in companies that borrows a lot of money to pay for things because they don't make any money, right? These kind of situations, it doesn't look good. And sure, you feel angry and stuff like that. And this is sort of why I want to show you all the time how these pumpers work, because kind of the disconnect between reality and what's really happening is why people feel angry, because they're essentially sold a lie, unfortunately. So when you see this psychology, it's funny that, you know, I'd be curious, like, kind of when you guys all got into the market and how you're feeling at this time. After anger, you got depression. Depression's like, okay, my my retirement money is lost. How can we pay for all this new stuff? I'm an idiot, right? And then you get back to disbelief, which would repeat the cycle again. So so this cycle is really quite funny, and you guys can look at it again. And again, it matches the ARK Invest. The only thing I would say with this cycle, which is a real thing, is not everything comes back. So it's certainly true that a market can come back. And I say can because I don't know a particular timeline. And the reason why I mention that is this particular time is in fact different than the past. The main reason is why, say, you know, after 0809, right, there's a major crash. Then what they did, the federal government, the Federal Reserve, kept interest rates at zero, right? They wanted to encourage people to essentially borrow money and get the economy going. They want to encourage people to go shopping, these kind of things. We're in an environment where we have the economy slowing, and the Federal Reserve is raising interest rates will make the economy slow even more, hence recession. So it's a different time, and I want you to understand that very clearly. So yes, in the past, we had this kind of a cycle where, you go from depression to disbelief and back to the rally, et cetera, et cetera. And sure, that could happen again, but I just want you to be realistic about it. The other thing too, that's a really, really extremely important point. Sure, some stocks will come back, and sure, companies will still continue to make money, but only the ones that are profitable and the ones that have good business models. If your money's in companies that are, again, losing money, they're on the edge of bankruptcy, they're in a bad business model, they have a horrible CEO that doesn't care about you, all of these kind of things, don't expect it to come back. Just because things go down doesn't necessarily mean they're going to come up. Kind of the way these crashes work is that all of the craziness and all your speculative stuff, those stuff crash for sure. It brings a lot of other stuff down with it, but the good companies and the good stuff do come back, but the bad stuff don't. So I just want you to illustrate to you guys sort of how these sort of pumper people work, kind of things that they say. They all say Wall Street is all stupid, numbers, forget that. Or they might do the other perspective and just making stuff up. Oh my God, it could be this number or even bigger, and we're all gonna be rich. So I just want you guys to understand this, and I hope it's really clear on sort of how the pumping works and why people feel so upset, because they feel like they were lied to. They trusted their pumper friend, but yet the numbers in the chart say something very, very differently. So protect yourselves out there, get some experience, and you'll do better in the future. So thanks again for watching, and I'll catch you next time.
When Shania Twain came on and the guys that was playing hip hop pulled up beside me right at the part when it says, "Man, I feel like a woman." And yeah, I was lip singing it. This is a once in a lifetime deal, right?